Hello and welcome to an FXTimes daily video recap. I'm CMS Forex market analyst Nick Nassad. Today's Tuesday, January 19, 2010. Sorry for the hiatus that we've had with our market recaps, but now we're back. Let's jump right into some fundamental data. In Germany, we had the ZEW economic sentiment reported for the month of January, and it disappointed forecasts as the index slid to 47.2 from December's 50.4. In the Eurozone, the index slid to 46.4 from 48.0. Though the current conditions index did improve in both Germany and the Eurozone, the thing to take away from this is that financial market experts surveyed for the index expect the German economy to recover only at a slow rate within the next 6 months. They believe that the automobile and consumption sectors are likely to develop downward in the next half a year. So that means that while there will be an economic recovery, it's not going to be a clear economic upswing, and so that the way out of the recession will be burdensome and long. Taking a look at the euro-dollar pair, we see that following the release of the ZEW economic sentiment, we had a sharp drop of about 150 pips as we fell from 1.44 down to 1.4250. That broke below our support that we saw to start the week at around 1.4340 and extended the declines we saw in Friday's trading. Zooming this pair out, we broke below this important power line around 1.4450 in Friday's trading. That power line was broken to the upside following the weaker than expected non-farm payroll release from the US 2 weeks ago, but now we've moved back below that level. Now we test the bottom part of this range we had in the late December and early January, and that support line did hold in today's New York trading. However, we'll see if this support holds throughout the rest of the week or if we experience a move further below. Further pressuring the euro was continued concern over the fiscal situation in Greece, which is struggling with soaring deficits and questions over its sovereign credit worthiness. The EU's Commissioner for Economic and Monetary Affairs said that while the Greece's fiscal consolidation plans are adequate, its plans for cutting public spending consist of ambitious targets. Ratings agency Moody's Investor Services also praised Greece's stability and growth program to fix its deep budget cuts, but it raised doubts about the government's ability to implement the plan. Those concerns have been reflected by traders selling the euro. Switching to the euro-pound pair, we see that the euro was pressured here as well, as it slid from its open around 0.88 down to the 0.8710 level. That extends declines in the pair that we've seen since January 12th. This week the pair has moved further below the 0.8850 level, which had acted as important support throughout December, but now we're about 120 pips lower. We'll see if this downswing we've seen the past 6 or 7 sessions now perhaps sees some form of counter rally, or if the euro remains on the back foot throughout this week. The pound was boosted by a positive UK consumer prices report, so let's take a look at that release. Consumer prices, which in the UK are looked at in annual terms for the month of December, rose to 2.9% from November's 1.9%. That 1% jump was a record increase since records began in 1997. On the month, the consumer inflation rose 0.6%, while core producer prices were up 2.8%. All three measures came in much higher than expected. The data may be an early indication that inflation pressures may accelerate in 2010, and it will add pressure for the Bank of England to begin considering steps it needs in order to tighten its monetary policy. The pound-dollar pair hit a high around 1.6450 in the wake of the CPI release. However, following that intraday high, the pair did recede back to its moving average. Similar to the euro-pound pair, the pound-dollar has seen a very strong rise in favor of the pound, and we'll see if perhaps it's due for a bit of a counter-rally correction. Switching gears a little bit and taking a look at the Australian dollar-US dollar pair, we see that the greenback was rather strong against this commodity currency in overnight trading until it hit a low near support from yesterday's session. The gains overnight were primarily led by news out of China, where the People's Bank of China allowed the yield on its one-year bills to rise another 8 basis points, which is the second weekly increase in a row. Also last week, the central bank raised the minimum bank reserve requirement, another move that generally heralds tighter monetary policy. It's a sign that the Chinese government is trying to put the brakes on economic growth, and that could reverberate to other economies in the region. The US dollar Canadian dollar pair, another one of our commodity block of currencies, also moved in favor of the greenback in today's trading, especially overnight. The pair hit a high just below the 1.0350 level, which came in the wake of the Bank of Canada interest rate decision. Recently, the pair moved below the 1.04 level, and we can see that we retested as resistance in last week's trading, but now we found some support below the 1.025. We could draw a second horizontal line at that level, though we did peak below it in last week's trading as well. So we are firmly in between these two resistance and support levels. The Bank of Canada policy statement was little changed from what we saw in December, with factors shaping the recovery, policy support, increased confidence, improving financial conditions, global growth, and higher terms of trade largely unchanged. With its overall assessment of inflation risks pointing slightly to the downside, today's report did little to change the bank's assertion that it will wait till the second half of 2010 to raise interest rates. With the economy recovering, and the Bank of Canada actually increasing its growth projections slightly for 2010 and 2011. This will put emphasis on the next meeting, which is scheduled for March 2nd, where the bank may begin to prepare the ground for exiting its current loose monetary policy and emergency stimulus. We also had from Canada its index of leading indicators, which rose to 1.5% in December, a better than expected figure. It's the 7th straight time that leading indicators have gone up, and it's making it a good sign for future economic growth in Canada. Turning to U.S. news now, international demand for long-term U.S. stocks, bonds, and financial assets soared in the month of November, propelled by $118 billion worth of foreign purchases of U.S. Treasury notes and bonds. Such high demand by countries such as China, the UK, and Japan may help to keep interest rates low. Including short-term securities such as stock swaps, foreigners purchased a net $26.6 billion worth of securities in November, which made up for the selling of $25.4 billion the previous month. Also, in our last currency pair for today, we are looking at the dollar-yen, and we see that the dollar advanced against the yen in overnight trading, hitting a high around 91.25. The yen was pressured by a weaker than expected consumer confidence report, which we didn't go over. But U.S. trading did see U.S. stocks rising and ending in the green, which gave risk appetite for this pair a benefit to the greenback. Zooming this pair out, we see that the yen had been gaining against the greenback after hitting a high near 93.70, but now we're starting to see some support as we approach the 90.50 level. So that will wrap up our market highlights and fundamental releases for today. So let's take a look at what we can expect in the upcoming trading session. Tonight, New Zealand will post its consumer prices for the fourth quarter, while Australia posts a measure of consumer sentiment. Japan, meanwhile, releases its Tertiary Industry Activity Index, which is a measure of its services sector. Overnight, Germany releases its producer prices, while the UK, in addition to its Bank of England meeting minutes, will post its monthly jobs report, which is its claimant count. The fundamental docket will be pretty busy tomorrow as well, as early in the morning Canada posts its consumer prices, which will be followed by U.S. housing starts and building permits, along with U.S. producer prices. Then Canada will release its manufacturing shipments. Tomorrow afternoon, New Zealand will release its manufacturing PMI and measure of retail sales. And that will wrap up our daily market recap. For more news, videos, and analysis, please do visit FXTimes.com. I want to thank you for watching and wish you happy trading. I want to thank you for watching and wish you good trading.